Hey guys, good morning. It's Tony. I did want to go a little bit in the S&P 500 after this huge push to the upside, which I am very disappointed about because it was such an easy trade for me to take. Right on September 5th, we actually closed a bullish day, and you did see a little bit of drawdown. The close here was 393. You saw a drawdown to 397, so about $5 in drawdown, but eventually you did end up, or as of right now, about like $10, to the upside. So I would have more than likely bought, like an in the money call here. And as of right now, I put it would have probably been up 50, maybe 70 something, 100%. So a little bit disappointed on myself because this was such an easy target to push to the upside. I did not wait for confirmation, and I got into my short here, which again I did end up taking down to this 388-ish level, set my stop losses, and I got stopped out. I only made it. I think I only made a couple $100 off of that because my stops were so tight. Because I did expect, or not expect, but I did want this trend to break so we can push really hard all the way down to 370. As of right now, though, I am not bullish yet. I'm not. A lot of people are have been, bullish for a little bit. A lot of people are turning bullish. I'm still 100% bearish. There's no reason for me to be bullish apart from this daily trend right here. So I can still see us push all the way to this trend to maybe 406, somewhere around this area before a retrace down. But really, it just comes down to this trend, right? Do we break this trend? And if we do, it's basically going to be a straight shot to 420. But keep in mind that CPI does come in next week, I think like Wednesday or something. So that is also definitely going to be a big piece of information that the stock market relies on. But as of right now, I am starting to go. I did start my shorts on Forex all over again. We are seeing early signs of. We are starting to see. Jesus Christ. We are starting to see early signs of another bear close on the 3 hour and 4 hour sometime soon. I think we are on a 0.5 retracement on the fib from the last trend touch, which is why I started my shorts. So there we go. So let's do this. Run that. Yeah, so not quite there, but a 0.5 retracement would be a 405. So I did start my shorts now. If we do run to 405, I will more than likely short again. And if we do run to this trend at like 406 and we touch the trend, I will more likely add more shorts. So actually, really good idea is to just add an alert on trend. So if we do hit that trend sometime today, I don't even have to be looking at the charts. It'll just set as soon as price touches this trend, I'll add more shorts, and then I'll probably add my stop loss somewhere like 408 or something. So in case we do pass 408, we will probably that'll probably be conversation. That'll probably be confirmation that we're going to push to the upside. So we can pretty much do this. We can add a Darvis box there. And more than likely, you are just trading within this range right now between this 407-ish. What was it? Yeah, like 407 down to like 388, 390. So you do have this Darvis box, this trading range right now, and you have pretty nice support and resistance on this 390 level, on the 401-ish level, again with this nice little downtrend here. So again, if we do break this to the upside, if we do break that 407 and we go to like 408, then I'm probably going to get stopped out of my shorts. I'll probably add longs if we do a retest here at 407. So we'll push up, come back down here, add longs. If we do come back down, I'll add longs again, and then we'll probably keep pushing to 420. That seems likely if this trend actually breaks to the upside. On the 4 hour, we are starting to see creations of divergence, right? We are starting to see some creations of divergence. Why does this chart keep doing this? Actually, I'll erase that trend and add this. Sure, that's fine. I'll add this trend here just because it's probably a little bit clearer. As of right now, we are starting to see instances of divergence. I would not be surprised if we see like some sort of wick up to like here, because that is the only place we either retrace from 407 exactly, or we wick up to like 411 and then come all the way back down. But that has to be a wick. Again, 50 MA under the 200. If we do run up to trend, right? If we do go up to trend, 0.5 fib, yeah, 0.5 would be at 405, so we do have to push a little bit more. But again, you're right there in the middle, right? You're starting to see a little bit of a push downwards. And again, it's just, we're starting to see divergence. You have the 50 MA under the 200. You have a nice 0.5 retracement. You have plenty of market structure around this area at 407. Yeah, because right now, because where we're at right now, there's not really a lot of market structure. I mean, I guess you kind of dictate this little portion here as market structure, but around the area where we're at right now, there's very little market structure. So I would not be surprised if we actually do push a little bit higher to like a 407 level. If we do push to this like previous high of 407, because at 407 obviously you have market structure here. 407 you have 407 you have market structure all right here, and then again 407. 408-ish, yeah, you have market structure here, market structure right here. So would not be surprised if you actually keep pushing up towards that 407, 408 level before you see a nice strong dive to the low side. And the DXY again, currently right now it is breaking towards the upside, and this is what I could possibly see in the coming days, right? But again, this all involves CPI. You do have a nice little gap from 109 to 109.636, so we can definitely come back, fill that gap, and then possibly retrace, or we can keep pushing up the trend and then retrace, or if we have like really bullish sentiment, we'll possibly break back into this gap, run up, break new highs, come back down, retest, and then push all over again. So a lot of things that can happen right here, right? So I can definitely see us go like here, break to like 111, possibly like here, like new highs, come back down, and then push back up, right? Especially if we do break to new highs, I definitely think that if we do break into trend, create new highs, come back, I do not think this will get broken. I do think we'll keep pushing up towards like a 112 level. And for the most part, I am pretty bullish on the dollar. I really don't think that that this is where the dollar crashes. I really don't think that this is where the dollar stops. Stops essentially going up. I do think it's going to be a consistent move. We could possibly come all the way back down to this major trend, hit back with like 107 or so, and then push up. But as of right now, still very bullish on the dollar. Even with small retraces, again, SPY keeps running and pushing to the upside. I am starting my martingale shorts right now. But again, still 100% bearish, right? Still 100% bearish. You still have this major trend up here that was started back from like, I think January, right? Yeah, back in January. So that hasn't broken yet. There's no reason for me to actually be bullish unless that trend gets broken. If the weekly actually turns bullish, then I will 100% start being bullish all over again, right? Last time we closed bullish, right, was actually perfect entry bullish. We actually only ran up for about 2 weeks, 1 week. And then here, the actual bottom is when we actually started pushing. So I could see this moving up, possibly back to this trend up here, like 420, retesting and then coming back down. But again, it's kind of up in the air right now. It's kind of hard to forecast where we're going exactly right now. All I know is that I'm still 100% bearish. There's no reason for me to be bullish. And I'm starting my martingale shorts up until we hit this trend right here. And then after we hit this trend, adding big boy shorts, tight stop losses, and taking this possibly all the way back down to 390 or so. So I'll see you guys later. Bye-bye.